What's up? What's up, everybody? Happy Thursday, April 25th. It's Portuguese Independence Day for all my peoples out there. Big day. Everything in Lisbon, Avenida 25 de Abril, Ponto 25 de Abril. Everything's 25th of April. So do a little research. It was a very interesting time in Portuguese history. And that leads us to where we are today in American history. A lot of things happening this week. A lot of stuff I've been talking about for a while now. You're starting to see the effects of that. And it's just wild. So I got a lot to go over today. I got some charts, I got some tweets. We're about to get in it. So the first one, I thought this was kind of funny because it's this tweet right here, because it's really like it tells you kind of what a lot of people don't realize. All right. So Meta, that's Facebook, they had their earnings this week, and Tesla had their earnings this week. So Meta beat expectations, right? Analysts said they were going to make this much money, and they made really this much money. And the stock price dropped 10%. Tesla missed expectations, right? Everybody thought they were going to make this much money, and they made this much money. So they missed, and the stock went up 10%. So why is that, right? So I'll just show you the chart right here just to see what I'm talking about. So this is the Meta chart, right? So you can see this blue line. This is the price. This is when earnings hit, and it just fell off a cliff, right? This orange is the trend. The trend changed, right? Here's Tesla. Same idea, but the opposite direction, right? Here's earnings. Earnings hit. Boom, right? Earnings hit. Boom, right? Stock went up. So why is that, right? Basically, it was priced into Tesla. Everybody knew Tesla was not going to hit their number, right? But what Tesla did on the call was they gave some positive forward guidance. And that's what the stock market is. You're investing in the future. What you did yesterday doesn't matter. It's what you're going to do tomorrow. Whereas Facebook, on the other hand, did not have such rosy forward guidance. So their stock went down as an effect of that, right? So today's news, this is kind of what we've been thinking was going to happen for a while. All right. So for those who don't understand, so first quarter GDP growth. So GDP is the measure of our economy. All right. If the GDP is going up, our economy is growing. If the GDP is going down, our economy is slowing. So we're in a point right now where our economy did not grow, right? Economists thought 3.4% growth in our GDP, right? And it actually only grew 1.6%. So what does that mean? That means the economy is slowing down, right? And along with that, we have inflation going up. So we have an economy that's not growing and things are getting more expensive. That is a recipe for disaster. And as you can see here, the worst possible outcome for the Fed, that's called stagflation, right? What is stagflation? That is totally zoomed in. Holy cow, what the heck just happened here? Hold on. Let's zoom this bad boy out so we can read it. My little chart. There we go. So stagflation is an economic cycle characterized by slow growth, a high unemployment rate, and high inflation. So our economy is not growing. Our inflation is growing, which means wages aren't keeping up, right? And unemployment should be going up. So now what do? Like the Fed, they're damned if they do, they're damned if they don't. If they drop the rate, the inflation goes up. If they keep the rate up, they'll further restrict the economy, but inflation's still going up. So, total insanity right now. Right? Just completely not an ideal scenario, right? And this has happened in the past. Do your history and just see what happened last time this happened. So a few minutes ago, some news just broke. 10-year note yield rises to 4.73%. That note right here, this number right here is what pretty much sets the mortgage rates. So mortgage rates are going up. Inflation's going up. So the prices of the houses are more expensive. The cost to borrow the money to buy the houses is more expensive. The economy is shrinking, right? So people in theory are making less money, and we all know that, right? Your money doesn't go as far. So just complete recipe right here. So how do we win, right? Oh, and then let's add one more thing. I'm sorry. There's one more thing we got to talk about. So President Biden yesterday, it's all over the internet, right? He kind of pitched this idea that he has to increase taxes. So on top of everything else that we just talked about, plus what we talked about the other day where we printed $0.95 trillion, which he signed into law, right? So that money was printed over the weekend, and we're going to show you a chart on money printed in a minute. He wants to increase taxes. Okay, so what does that mean? Well, it's a tax on the wealthy, right? Who cares? Well, not necessarily. Okay, capital gains is any investment income. You buy a house, you sell it, you have a capital gain. There are some exemptions. We'll talk about that in a minute. And I really think they want to get rid of those too, but we'll get into that. You have a 401k with stocks in it. Those are capital gains. You get a CD at St. Anne's Credit Union. There's a capital gain there. So right now the capital gain is 24%. He wants to go to 44. Again, I don't know that this will ever pass, but this is what they're talking about. Okay. So almost doubling it, right? And the craziest thing is a 25% tax on unrealized gains. This is just insanity. I don't even know how you would even do this, right? So right now, when you pay tax is when you realize a gain. I buy a stock for $100, I sell it for $150, I realize a gain of $50, I owe taxes on that profit. But if my stock goes up to $150 and I don't sell it, how do I pay taxes on that? So I don't know, but I just think it's poor timing to even bring this out. I almost wonder if they're like using us as a focus group, kind of testing ideas. But listen, guys, Canada just passed something very similar. They signed it into law last week. And I did say to some people, and I might have said it here, I think we talked about it. The US government lately is looking at these other countries and seeing what they can get away with. Canada really up their capital gains. I was on a call last week with a bunch of great guys in Canada that own property management businesses. And, they were kind of telling me about it. People are rushing to get deals in before the deadline, so I almost wonder if they're seeing, if they can get away with that here. That is certainly something we don't want. We know a lot of our people who would put this into policy would not benefit from that. So they may not vote for it. All right. So one last thing I want to talk about, and, we'll get into that capital gains thing about houses. I'll show you that in a second. But when we talk about money printing, it's an increase really in the money supply, right? So money supply is all the currency and other liquid assets, instruments in a country's economy on the date measured. So over time, the amount of money in circulation has been increasing rapidly, which is a direct correlation to inflation. Like how that rhymed? Right? The direct correlation to inflation, right? So the M1 money supply is total amount of physical currency and coin, demand deposits, traveler's checks, other checkable deposits circulating in the economy, right? So how much money is out there? So I put together another little chart. Let's see here. So this big giant purple line. So this chart starts on January 1st, 2020. So I went back to January 1st, 2020, which was before everything happened, right? About 4.5 years ago. All right. All of a sudden, March of 2020, look at the sharp increase in money. So we go out to today. This is a percentage increase over this time, 352% increase in money supply, which is a direct correlation to inflation. Okay, now let's throw inflation over this. Let's see if I can find it. CPI. This is the cumulative CPI. So according to this data, it's 21% since 2020, but it's dwarfed because of that giant number. So let's take that money supply out. All right, that looks more like it. There's inflation since 2020. Okay, we feel it. We know that. Okay, so we have things are getting more expensive, right? We have more money in circulation, right? It's just insanity how much money has been added, right? They've taken some out, but they have this measurement too, which is M2 supply, which measures like debt and stuff like that. So if we take that out, you can see there, it's more than inflation, right? All right, so now let's take out the M2 real quick, and let's add the Case-Shiller house price index. So there you go, okay? So if you own real estate, so if you keep your money in a bank, okay, and that's what this really means here. So if you keep your money in a bank, that's how much money was added to the system, thereby devaluing you by a massive amount, okay? So if you buy hard assets and you take your money out of the bank and you just put it into real estate, look at that. You're at 45% increase since 2020, okay? So you've beat inflation by double, which is really good. All right. Let's look at some other things. What if you put your money into gold, right? Gold, surprisingly, is up 52% since 2020. So you beat inflation. So again, hard assets are the theme, right? What if you put your money in the stock market? S&P 500, that's the benchmark. Boom, 55%. So you're up 55%. So this is the common theme here, right? We know that these things are happening, and we need to take action to avoid being poor. Because if you don't take any action, you're going to get poor, right? And I was talking with someone yesterday, and I kind of was saying to them, like, if you think the government's doing a great job and they're being good stewards of your money based on all that economic data I just showed you and the ideas that they have, then by all means, keep your money in dollars, keep it in the bank, don't buy hard assets. Not a problem. Go with what you believe in. But if you don't believe that they're being good stewards and you don't believe that they're doing a good job and you believe that our economy is in rough shape, then you may want to expand where you store your money, right? I would not keep it in dollars. I wouldn't keep it in bonds. Bonds are investing in the government, So here's a couple of examples right here. If you have hard assets, you can beat inflation. Now, everybody knows one of my favorite hard assets. Wow, look at that chart. Bitcoin, since 2020, 704%. I mean, it just dwarfs everything, right? And we can zoom in a little more. I mean, you can see, let's see, has it gone over? Right here. Let's see, what's this timeline? This is from 2021. So Bitcoin was down a little bit. Bitcoin goes in cycles. But, over that time period, and as we zoom in further, right, let's go year to date. Let's see, just this year alone. 45% Bitcoin's up, gold's up 13%, S&P up 7%. Inflation is saying 1%. So some of these are quarterly, so they may not, reflect right away. But, just to show you, if you believe that we are not having good stewardship of our money and our economy, then you may want to look at other things to invest in. And the one last thing I'll leave you with before I go, this comes up every so often. And a lot of you, and really quick about the tax thing, I wanted to mention something. So they're saying all those taxes, right, that they propose, they think it's going to raise $254 billion over 10 years. But they spend $1 trillion every 100 days into our debt. So you're just never going to win, okay? So the last thing here is the home capital gains tax exemption. So a lot of my friends out there who I helped in the last 5, 6, 7 years purchase properties are up six-figure gains. 100,000, 200,000, 300,000, like real money. People are up for buying properties in 2017, 2018, 2019, 2020. I mean, just since 2020, nationally, it's 45%. So if I got you a $200,000 house in 2020, that house is almost $300,000 now. That's almost six-figure gain, right? And there's no house in Massachusetts for $200,000. So a $400,000 house in 2020 is now $600,000, $200,000 of gains. So if it's your primary residence, this has been a thing for a while. If you've owned your house for 2 years and it's your primary residence, it's like 2 out of the last 5 years you lived in it as your primary residence. Married couples, $500,000 capital gains exemption. Single taxpayers, $250,000 gains exemption. So for many of you out there who are not wealthy, right? A lot of us are not wealthy, right? This is a big portion of your net worth. So, and this is one of the few gifts we get from our government. We sell our primary residence. You have this huge exemption, which really helps you get to the next level, right? My first primary residence, I sold it. I was able to get 4 investment properties and my next house and do some moves just with that tax-free gain, so that's a gift. And every so often there's talk that they want to take that away. Trust and believe. If this 44%, 25% untaxed gains thing, any smidge of it goes through, it's only a matter of time before that's jeopardized. And it's been brought up before. So when you think it's just the billionaires and the rich people and it can't happen to you, a lot of you are sitting on some wealth right now, and they will take every opportunity to tax it. So, hey, again, so just take that for what it is. All right, guys, but listen, always opportunities. There's always a way to win, right? We got to make our own money printers. do enough actions to avoid being poor, and as a byproduct, you will get rich, okay? The economic data is not surprising. We've known that this was going to happen. Been watching this for a couple of years now. There's just a lot of stuff that's just kind of boiling up. I don't think rates are cutting. I made a bet that they would cut in May. I'm holding out hope that this GDP thing, they might, but I don't think they will. So I might owe a friend of mine a nice bottle of scotch, but it's all right. So yeah, guys, look for alternatives. You want to get hard assets, and you want to protect your purchasing power and the value of your time. All right? Take it easy, guys. Talk to you soon.